Hello, Bitcoiners and freedom lovers around the world. This is Mark Berger, your Bitcoin consultant. And I have wanted for a long time to talk about the infinite money glitch. It's a very exciting opportunity for everybody in the world regarding Bitcoin. And I've wanted to talk about it for a long time. It's been percolating in my mind for several months now. But I didn't do a video a couple of months ago because there are a number of things happening with the United States budget, the one big beautiful bill, and the problems that the U.S. is having with its debt and its deficit. And that's really the whole reason for Bitcoin's success in the first place. People say Bitcoin's it's a Ponzi scheme, it's in a bubble, but the price of Bitcoin really isn't going up. What's happening is the value of the dollar is collapsing over time. And that's really the way we all should be looking at Bitcoin, is that it's a hedge against the collapse of reckless spending by the United States and all the world governments in the world. So, let's get into that. Right now, we're sitting at a United States debt of about $37 trillion. The current deficit, in other words, how badly is the budget looking for this fiscal year for the United States? We're at $2 trillion right now. And the fiscal year doesn't end until October 31st. So we've got one, two, three more months to go of deficits. And so we're looking probably somewhere around high two, low $3 trillion deficit for this year. So this is really the problem that the world is trying to deal with, and that's why we had Doge come in, Elon Musk's group, looking for pennies under the couch. Basically, how are we going to raise money to pay off our debt, the United States debt, and close this deficit? Well, Doge, of course, was just an advisory board, had no statutory authority. Congress is only the only body that can do that with a signature from the president to actually cut budgets or to raise taxes. And Doge, I think, may, at the end of the day, may eventually squeeze $500 billion off the deficit. That's it. So, really not enough. The other area that Congress and the president praise that'll get us out of the debt and the deficit is growth, right? Economic growth could get us out. But even though we've had some pretty good economic numbers, maybe 3% GDP growth, that's nowhere near enough to grow our way out of our deficit and debt problems here in the United States. So that brings me to the Genius Act, which is a law that was just passed by the Congress and signed by President Trump last week. And that regulates what are known as stable coins. Now, what are stable coins? Well, they're simply a digital coin that is backed by the US dollar. That's all it is. But why would we need something like that? Well, in America, we don't need anything like that. I mean, our dollars are our dollars, and they're actually in our bank account, at least in the digital bank accounts that we have, because the banks really don't hold the money. They just give us a computer readout of our money, and that counts as money. And then we can use that computer readout to pay our mortgage, to pay our credit card bills, to pay whatever. So the stable coin is really designed for people outside of the United States. Well, why do people outside of the United States want dollars? Now, if you don't live outside of the United States, this might be hard to comprehend, but about 50% of all the debt in the world is denominated in dollars. Now, this has been done over decades through the International Monetary Fund, which is basically an American organization, and the World Bank, another American organization that lends money to countries around the world, mostly developing countries, and they give them loans for various reasons to prop up their country's finances. And these loans, of course, are have to be paid back in dollars. So these countries all have to have dollars to pay back their loans. But this trickles down to businesses in other countries and also into mortgages for houses in other countries. They're often are denominated in dollars as well, because dollars are not devaluating. They are not losing their value as fast as other currencies. Now, I opened up this video saying that the dollar is really in trouble because our debts and our deficits, but the dollar is really the prettiest pig at the county fair, as I like to say. It's the best currency out of all the horrible currencies, national currencies that we have in the world. So people in other countries, they would rather denominate their debts into dollars because it's more stable. And banks would rather give debts in dollars because their currencies depreciate as much and they lose in the value of the loans. So there's this enormous value, enormous demand for dollars around the world, and that's colloquially known as the euro-dollar trade. Now, these dollars aren't just needed in Europe, they're needed around the world, but it's called the euro-dollar trade. So there's an enormous demand for this, and we see this in the current stablecoin market. Stablecoins are issued by companies like Tether, and Tether is probably the most popular stablecoin out there. If you send $1,000 US dollars to Tether, they will give you 1,000 tokens known as a cryptocurrency that is then it's accepted as dollars around the world. And they do an enormous business of issuing these coins. So Congress took up this business of regulating stablecoins, and they're doing this before the Bitcoin Reserve Act. Now, they are making this such a priority, and the Trump administration has made this such a priority because the stable coins actually have, they believe, the ability to bail out the United States government and the debt. So, how is this potentially going to happen? And I don't think it's going to happen. These stable coins, by law now, must be backed one by US dollars. And by the way, not anyone can issue a stable coin. I can't issue a stable coin. You can't issue a stable coin, but very few select money transmitters in the United States, the biggest banks in the United States, can create these stable coins. And these stable coins have to be backed by US dollars. And more specifically, they have to be backed by treasury notes and other credit instruments that have less than a 90-day expiration. So, like a 3-month bond is the way to look at it. So, it's a short term note. So, why is this done? Well, in the last few years, when Janet Yellen was the Secretary of the Treasury, she was facing a big problem in the rollover of the long term 10-year, 20-year, 30-year bonds of the United States. They were expiring and they had to be renewed. We had to get new money because the old bondholders wanted their money back. And so we had to give them back their money on these old bonds, these long duration bonds. But when we went to market to sell new long dated bonds, the Treasury discovered that there wasn't much demand for these long dated bonds. People don't feel comfortable owning long-term United States debt. They didn't want to risk 10 years or 20 years time to be paid back by the United States government, which is not a sign of confidence at all in the long-term viability of the United States government. So what did Janet Yellen do? What she started to do was issue shorter duration debt. So 1-year bonds, 2-year bonds, 6-month bonds, 3-month bonds. Okay. So these stable coins is appears to be a way to ease in the debt problem, ease the burden that the Fed has and the Treasury has in selling bonds to finance our debt. And so that's why the Genius Act came into existence. Now, there are a lot of doomers out there who are screaming, "Oh, the Stable Coin Act, the Genius Act, it's going to lead to a central bank digital currency because any one of these issuers of stable coins can turn off your coins anytime they want." Well, this is technically true, but I would like to remind everyone who has a U.S. bank account that your bank account can be turned off at any time as well for any kind of criminal action. The IRS can come in and shut down your bank account as well. We already live in a central bank digital currency regime, although not on a granular level. They can't, tell us exactly what we can spend our money on, but they can shut down our bank accounts. And many people and many businesses have had a difficult time opening up bank accounts over the last 5 years in the United States. And this is true in Canada as well, and many other countries. People are debanked regularly. So we already have a form of monetary tyranny that already exists. And the other point I like to make about the potential threat of these stable coins being turned off by a private bank is that there's going to be many of these stable coins. It's not just going to be one singular issuer of stable coins. There's going to be JP Morgan stablecoin. There's going to be Wells Fargo stablecoin. There's going to be Citi stablecoin, on and on and on and on. All these banks are going to want to get into the action because it's extremely profitable, to create this money. Tether has proven this. It's one of the most profitable companies in the world, actually, but just by issuing stablecoins. So these big banks want to get in on it, and the big banks told people in Congress, we want in on this too. So that's why the stablecoin, the Genius bill was passed. But like I was saying, if any one of these banks, shuts down your stable coins, well, what are you going to do? Well, you're going to go to another bank. And unless there's actual collusion between these big banks, and I'm not saying that's impossible, but unless there's actually collusion, which is illegal still in this country, you can't be colluding in the same market. Unless these banks are colluding to shut down people on a blacklist, you're going to be able to go to another bank and get stable coins from another issuer. So I don't buy this argument that stable coins are simply a backdoor way to implement a central bank digital currency. So, that's very interesting. This whole problem of the debt is really what's driving Bitcoin's value, because there's just falling confidence in the US dollar. And inflation, as anyone knows in the United States, is out of control. Where I live, I regularly still see a dozen eggs priced $8 and above. If you want the high-end eggs, they're like 11 bucks a dozen. The cheapo eggs are maybe $6 or $7 a dozen, and that's crazy. I mean, just 5 years ago, you could get a dozen eggs for $2. So, and this goes for housing. This goes for car insurance. This goes for anything that you buy. The prices are just crazy, and that's because we're printing money. The United States is printing money, and we've got this deficit. And printing money out of nothing is what creates inflation. There's no two ways about it. And if we can't get this debt issuance problem under control, if we can't get other countries and other people to start buying our debt, our US Treasury bills, what's going to happen? We're going to have to print the money out of nothing to buy our own debt. That's the end game here, and that's what's going to drive serious hyperinflation. That's what's going to destroy the currency. And that's why Bitcoin is the hedge. That's why Bitcoin has been gaining value, because our currency is losing value. So Bitcoin isn't necessarily going up. It's the US dollar and other currencies are collapsing. And there was another interesting fact. And by the way, I just want to mention that the Government Accounting Office recently issued a report I saw from TruthStream Media, hat tip to them, that they read the GAO office report saying that they could not verify the US government's estimate of current deficits and debt. That materially, there's not enough evidence to actually verify what the US government claims is our debt and our deficit. Not only that, I think they've been saying they can't verify this since like I think 2008 or something. So, I mean, who knows how much debt is really out there? Who knows how bad the deficit really is? So, just another factoid. But something else that came out in the last few days, and that was that the Federal Reserve made a suggestion in one of their official memos or briefings or something. I mean, they're not government, but anyway, they still publish papers. And they pointed out that the Fed and the US government hold thousands of tons of gold, in Fort Knox, right? But that gold has been by Congress, I believe, has fixed the value of that gold since 1973 at like $42.33. Something ridiculously low. That was the price in 1973. But we've never adjusted that price to market to actually give a real current price for that asset. And currently, gold is around $3,300 an ounce or something like that. So that's a huge markup. And the Fed says, well, what if we just did a little accounting trick here and we just started to put the price of gold on our books back at a real market value? Because currently, I think at $42, the value of our gold is only listed at $1 trillion. Okay. Well, if all of a sudden you marked to market the price of gold, well, I think it gets close to wiping out, our debt, or at least it puts a significant debt on it. I haven't run the numbers here or the math. To me, it just reeks of desperation of how the government and the Fed are really trying to prop up the dollar, are trying to maintain this power of the dollar. Right. Oh, here's another point, is that in the Fed's memo that just came out about revaluing gold, they did the calculation and going from $42 to $3,300, they did an annualized calculation, and they said that on an annualized basis, that value of gold has changed by, I think, 8.7% a year against the U.S. dollar. So if you look at it on the flip side, what that means is that the US dollar has lost against gold 8.7% a year on average since 1973. Okay, that's a real rate of inflation on average every year. The currency has been debased by 8.7% against gold. That's been the real inflation rate. So if you're holding dollars in any form, basically you're getting robbed 8.7% every year just by holding dollars. Okay, so if you're holding dollars, it doesn't make any sense to hold it. And that's why people seek to invest. That's why people seek to put their money in the stock market. And by the way, what has the stock market returned on average for the last 50 years? Oh, about 8, 9% actually. It's pretty interesting. But if you're just investing in the stock market, you're just treading water. You're just trying to keep the value of what you've saved, at an even pace with the devaluation of our dollars. And the Federal Reserve just admitted this. I think it was on August 1st, like on Friday. Um, so just really bizarre stuff is happening right now. The Federal Reserve is admitting, they're basically, saying there's this elephant in the room, and that is, yeah, we've basically debased the dollar by 8.7% a year for the last 50 years. Oops. You know, it's like, yeah, and well, what are we going to do about it now? The world is waking up to it. We've got these huge deficits every year. The debt's now $37 trillion. How are we going to get out of it? Well, okay, maybe we value gold, and that will help things. So, but this leads me to the final point, and this is the infinite money glitch that Bitcoin treasury companies have figured out, and a lot of people have figured it out too. And this infinite money glitch was a term that I didn't really knew existed, but I was talking to my Generation Z son this summer while we were out on holiday in Ireland, and he told me that's actually an expression from video games. Like it's some sort of a glitch. Like if you know the cheat code to get more money for your character, you just type it in or whatever, or click this thing on the screen or whatever, and you just get free money. Well, there's this infinite money glitch that people have figured out, that if you can borrow dollars and buy Bitcoin for it, that's like an infinite money glitch. And it basically works like this. Bitcoin is an asset that has appreciated about 50% a year in its lifetime. In other words, Bitcoin has gained in value 50% versus the US dollar. Now, if you can borrow money even at 10% or 15% a year and pay that interest, you're still making an enormous profit because your Bitcoin is going up on average 50%, and you're only paying maybe 10 or 15% in interest. What are you making? What's your profit? Your profit is that spread, the spread between what you're paying for interest and the gain that you're getting in Bitcoin. So in this case, that's like a 40% or 35% profit when you borrow money to buy Bitcoin. And even if Bitcoin doesn't appreciate 50%, say even Bitcoin appreciates 30% a year, and you're still borrowing money at 10% or 15% a year, you're still making a very good profit of 15% or 20% a year. So this is what a number of companies are starting to do. And it was started by a company named Microstrategy. And I mentioned this in my last video, that Microstrategy for a number of years now has gone to the debt markets. They first started issuing bonds, borrowing billions of dollars in the bond market, only having to pay something like 2% or even less than 2% on these billion-dollar bonds. They take this money and they buy Bitcoin with it And that's their whole business. They're simply raising money, borrowing money from the free market at low interest rates and buying Bitcoin with it. And they have transformed their entire business to this strategy, to this infinite money glitch strategy. And it's blowing people's heads off. How can this happen? How can this work? This possibly can't happen forever. The naysayers are saying this is ridiculous. We've never seen anything like this. This can't happen. This is basically an arbitrage, right? Arbitrage. You buy the appreciating asset and you sell the depreciating asset. The dollar is the depreciating asset. You buy the appreciating asset of Bitcoin. So that's an arbitrage opportunity where you can make money. And people say, well, arbitrages eventually balance out so that there's really no arbitrage anymore. They're basically become of a same value. So eventually these arbitrages will work themselves out. But MicroStrategy has been doing this for 4 years now, and they continue to raise money in very creative ways. They go to Wall Street and they raise money. Now they're issuing preferred stock, and anyone can buy these preferred stocks. And these preferred stocks are offering interest rates that are double a money market. They're double what you can get from the US Treasury. They're like 4 times greater than what you can get from a money market fund, or 8 times higher than you can get from a money market fund. So these preferred stock offerings, you buy them and they will give you dividends of 8, 9, or 10% a year. And investors are snapping these things up, of course, because it represents an enormous value, tremendously better than anything anyone can get in the market today. Their latest offering, called colloquially called Stretch, which is STRC, I believe, it'll give you a dividend of 9% a year, and they're promising to keep the value of the equity fixed at about $100. So you have no risk of the equity itself losing value or gaining value for that matter. And you're almost guaranteed to get a 9% return. And they just raised $2.5 billion with this offering. $2.5 billion. And what did they do with this money? They slammed it right into Bitcoin. And they're going to continue to look for ways to raise money like this because they say, fine, we'll give you 9%. We'll continue to offer 9%, 10%, because we're going to be buying Bitcoin, the best performing asset over the last 5 years, 10 years, and 15 years. And that's what MicroStrategy is doing. And interestingly, I didn't mention that Bitcoin is the best performing asset over the last year because it's not. What's the best performing asset over the last 1 year period? It's MicroStrategy. It's this company that's using this infinite money glitch strategy to borrow money and then buy Bitcoin with it. I mean, it's just crazy. It's absolutely crazy. And MicroStrategy has had such success with this. MicroStrategy is the best performing asset. It's the best performing stock in the world right now, better than any Magnificent Seven, better than Nvidia. It's even better than Bitcoin, even though Bitcoin has basically doubled over the last 12 months. MicroStrategy is up like 150%. And it is designed to do this. It is financially engineered to do this. It is not an accident. It is not a bubble. It is not a mania. It is designed to outperform and amplify the performance of Bitcoin. Now, here's where I want to temper everyone's excitement, or at least temper my excitement, is that this is not financial advice. Do your own research. MicroStrategy is risky. Bitcoin is risky. And I personally do not believe that anyone should be buying MicroStrategy stock, unless you already have a significant amount of Bitcoin held in your possession in cold storage, not on an exchange, not on a mobile app, Bitcoin in cold storage. And of course, this is what I help people do. I help people take their Bitcoin and take it off of exchanges, take it off of mobile wallets where it's risky, where it's subject to theft, where it's subject to fraud, where it's subject to bankrupt companies, where you're subject to hacking and phishing attacks, and get it into cold storage where it's safe and it cannot be taken from you very easily. It's much safer than having it on exchanges. So until you have Bitcoin in cold storage, do not think about these Bitcoin treasury companies. But MicroStrategy, now known as Strategy, is blazing a trail here. There are now something like 160 companies around the world who are following this exact same strategy. They are borrowing money in the bond market. They are offering preferred equities. They are doing something called pipe instruments, and offering and diluting their shareholders um, by offering more stock. 160 companies around the world are doing this because it works. Strategy has proven this. Even though shareholders are getting diluted, their value per share of Bitcoin is rising faster than the dilution rate. It's the same thing again. Yes, stockholders are getting diluted a little bit, but overall, you're getting more Bitcoin per share. And that is the reason why these Bitcoin strategy companies can outperform Bitcoin, because your Bitcoin per share is growing. If Bitcoin per share stayed flat, it'd be just like the same thing as owning the Bitcoin ETF. It'd just be the same thing as owning Bitcoin. There would be no advantage to Bitcoin treasury companies. But because Bitcoin treasury companies are growing the amount of Bitcoin that shareholders own per share, it outperforms Bitcoin. It's absolute financial genius, actually. And this is very exciting. This is like an infinite money glitch. Now, when could this arbitrage opportunity of, borrowing low and buying, the best performing asset over the last 5, 10, and 15 years, when could this possibly change? Well, the only way for this could change is if interest rates go sky high, or if the growth rate of Bitcoin goes to match the interest rate of, say, 10 or 15%. Well, how would it work if Bitcoin's growth rate slows down to like 10 or 15%? Well, the price would have to explode. We would have to go from like 100,000 to, you know, $1 million in 2 years. And then the price would have to basically kind of stagnate there. You'd have to only grow at 10% a year, because how much more can Bitcoin grow once it gets to $1 million? That's the only way this arbitrage could be eliminated. That's the only way the infinite money glitch could be eliminated. Interest rates have to go crazy, which is a possibility, or the value of Bitcoin has to just explode, and then its growth rate has to kind of stagnate for a number of years, and then we get equilibrium again. But that's the long-term strategy here. And Michael Saylor, the CEO of Strategy, just said it's his goal for Strategy to be the number one stock in the world, the largest stock in the world. And he's talking about his company having a $100 trillion valuation eventually. Now, to put that in perspective, the most valuable company in the world today, the company with the largest market cap is Nvidia. You probably heard of it, and it's something at a $4.5 trillion market cap right now. And MicroStrategy has really the goal to be the number one company in the world. And if Bitcoin simply continues to do what it's done for the last 5 years and 10 years, I think it could definitely happen. And once you get your Bitcoin in cold storage, then you can start thinking about outperforming Bitcoin and owning the strategy stock. And even if you don't want to do that, even if you're just interested in getting 8, 9% on your cash and getting it out of a bank account or getting it out of a money market fund, take a look at Strategy's preferred stocks, particularly Stretch. And it's a great way to earn extra interest on your money that you need to keep liquid. So please set up an appointment with me and we can talk more about getting your Bitcoin into cold storage where it's safe. And also we can talk about strategy and the infinite money glitch and these preferred stocks as well, and other Bitcoin treasury companies, because I maintain a list of some of the best performing Bitcoin treasury companies around the world, in England, in Japan, in France, and in other places, and of course the United States as well, and in Canada. So set up an appointment with me, and I'd love to talk to you and explain more about this and to work with you to get your Bitcoin into cold storage. So that's it for this update. There's a lot going on, and Bitcoin is just kind of hanging out there right now at about $115,000. We're up like 10%, on the month. So everything looks good for Bitcoin. I think we'll have few more months, good months here of Bitcoin at least. And actually, I think maybe next time I talk to you, I might want to talk to you about the possibility of this 4-year cycle ending. But until then, we need to watch this market for the next couple of months, and Bitcoin could really explode here. So again, get your ducks in a row, get your Bitcoin in cold storage, and be ready to ride this thing out because the world is changing fast. The dollar and the euro dollar markets are changing rapidly, and the world is moving towards a Bitcoin standard slowly but surely. Okay, I'm your Bitcoin consultant, Mark Berger. Thanks for listening. Please subscribe to make sure you don't miss my next video. Like this video and share with your friends if you found it valuable. Thank you. Bye now.